Hey everyone, and welcome to The Explainer. I am so thrilled to have you joining us today. Let's just dive right into it. If you're an entrepreneur or a business owner looking to officially and safely close down an LLC in the state of Alabama, you are in exactly the right place. Today, we're walking through a complete step-by-step roadmap on how to dissolve your Alabama LLC the right way. We're going to take all those complicated legal and tax requirements and just break them down into super clear, actionable steps. So did you know that dissolving an LLC in Alabama incorrectly can actually lead to penalties and lingering liabilities? It's completely true. Now, I know that closing a business can be an incredibly stressful and emotional time. Honestly, you might just want to lock the doors, turn off the lights, and walk away. But here's the thing. If you just stop operating without formally closing your entity with the state, Alabama still considers your business active. And that means fees, annual reports, and taxes are just going to keep piling up. But don't worry. By following the chronological roadmap we're laying out today, you're going to learn exactly how to avoid those pitfalls and, most importantly, keep your personal assets protected. Okay, here is our roadmap for today's explainer. First, an introduction to LLC dissolution. Then, preparation for dissolution. Third, filing the required paperwork. Fourth, tax implications and final filings. Fifth, legal and financial considerations. And finally, number 6, practical examples and common mistakes.
All right, let's jump right into Section 1, Introduction to LLC Dissolution.
There is this concept of ghost liabilities, and it is exactly as scary as it sounds. Failing to properly close out your business can literally leave you personally exposed to these ghost liabilities years after you thought you were done. See, as long as your LLC is legally active, it can be sued, and it can incur debts. If you ignore the formal process, creditors might be able to do what's called piercing the corporate veil. That basically means they bypass your business shield and come straight after your personal home or your savings for things the business owes. You have to officially sever that tie. To sever that tie safely, you enter a mandatory legal phase known as winding up. This is the essential transition period where a business has to collect its assets, discharge all its liabilities, and distribute any remaining property before the formal dissolution is complete. Basically, you are no longer operating normally. You aren't taking on new clients. Instead, your absolute sole focus is just cleaning up the existing affairs.
Moving right along to Section 2, Preparation for Dissolution.
So the really crucial point here is that you need to follow these exact sequential steps internally before any state forms are signed. Step 1, approve the dissolution via your operating agreement. You need a formal vote or written consent from the members to legally authorize the closure. Step 2, notify your creditors and claimants. You've got to give them a mailing address and a hard deadline to submit their claims. Step 3, settle all debts. And I literally cannot stress this enough. Under Alabama law, the very first priority of distributions goes to creditors. You have to pay them first. And finally, Step 4, distribute the remaining assets to the LLC members based on their ownership percentages. But remember, never ever pay yourselves before paying the LLC's debts, or you're risking personal liability. Now, you might be wondering, what is the deal with this 2-year mark? Well, Alabama statutes provide a really specific procedure for handling unknown claims. If you publish a notice of your dissolution in a local newspaper, you can legally bar unknown creditors from coming after you if they don't file a claim within a strict 2-year window from that publication date. It's just a fantastic way to put a firm expiration date on those ghost liabilities we talked about earlier. Okay, let's get into Section 3, filing the required paperwork. Navigating Alabama's bureaucracy is actually a little unique. You don't just mail your forms straight to the Capitol. Step 1 is to complete your articles of dissolution, which, by the way, absolutely must be typed. They will not accept handwritten forms. Step 2, you have to file 1 original and 2 copies of this form with the county judge of probate in the specific county where your LLC's original certificate of formation was recorded. Then, Step 3, once the probate judge records it, they will actually transmit a certified copy to the Alabama Secretary of State for you.
And of course, there is a fee. The standard state processing fee for the Articles of Dissolution is $100, payable to the Secretary of State. But keep in mind, your local county probate office is also going to charge their own separate recording fee, and that varies by county, so you'll definitely want to call them ahead of time to get the exact total. Now, if you're in a rush, Alabama does offer expedited processing for $200, but honestly, standard processing is typically handled quite efficiently.
Let's transition to Section 4, tax implications and final filings.
In Alabama, your business standing is essentially split between 2 different agencies. The Secretary of State issues a certificate of existence for your legal status, Meanwhile, the Department of Revenue issues a certificate of compliance which proves you are current on taxes. Now, interestingly enough, Alabama doesn't strictly require you to obtain a tax clearance certificate of compliance just to file your dissolution paperwork. However, and this is a big however, you are absolutely still required to file all your final tax returns. That means income, sales, and employee withholding. And you must mark them as final. If you don't do this, the Department of Revenue will just keep expecting returns from you.
Okay, listen up, because this brings us to one of the absolute biggest traps for business owners: the Alabama Business Privilege Tax, or BPT. This tax accrues on January 1st every single year just for the privilege of doing business in the state, and it continues to hit your account until the entity is formally legally dissolved. If you ignore this, the penalties are steep. You'll owe a penalty of 10% of the amount due or 1% per month until paid, whichever is greater. Seriously, do not let this slide. File your final BPT return.
All right, on to Section 5, Legal and Financial Considerations.
Let's just map out exactly what this looks like chronologically. On day 1, you file your articles with the probate judge. By about day 10, the judge typically transmits that certified copy over to the Secretary of State. Now let's jump ahead to day 120. That is exactly how long the state holds on to your dissolved LLC's name. After 120 days, that name becomes completely available for any other business to register and use. And, as we mentioned earlier, by year 2, assuming you published your notice in the newspaper, all unknown creditor claims are permanently barred. This timeline is basically your path to total peace of mind.
And finally, Section 6, Practical Examples and Common Mistakes.
Let's recap the big 4 mistakes that complete beginners make when trying to do this alone. Number 1, skipping the internal operating agreement vote. Doing this just creates messy disputes among members over who actually had the authority to close. Number 2, forgetting the business privilege tax. We just talked about those nasty 10% penalties. You don't want those. Number 3, not closing the federal EIN account. You actually have to tell the IRS you are closing by checking the final return box on your federal taxes and filing forms like Form 966. And lastly, number 4, distributing assets before paying creditors. Remember, paying yourself before settling the LLC's debts is a super fast track to piercing your liability shield and getting sued personally.
Now, quick pause for a really important reminder. This explainer is for informational purposes only and does not constitute legal or financial advice. Please consult a professional for specific guidance tailored to your individual needs. Every business has a completely unique footprint, especially when it comes to liquidating assets and filing final tax returns. A great CPA or a solid business attorney is worth their weight in gold during this process, just to ensure you don't miss a single thing.
And just like that, we are at the finish line. Once you followed this guide, filed the paperwork, paid the $100 fee, settled your taxes, and the Secretary of State updates your status to dissolved, your LLC is officially closed. So, my question to you is this: what new venture are you going to build using the hard-earned lessons you've just learned? Look, closing a business isn't just an end, it is a foundation of experience for whatever you choose to do next. Thank you so much for joining me on this explainer today. Stay focused, stay curious, and I will see you on the next one.